right, hello everybody and welcome to another Pepperstone live event. What a couple of days we've had, from big downs to huge ups in the pre-market here over the last 24 hours. It looks like there's quite a lot of action going on. We might have just lost the screen, so we'll just quickly update that again. But what a couple of days it's been, Tyrone, and it looks like we're getting even more announcements here coming in from relaxing tariffs and giant volatility. And this brings up quite a few resistance and support zones. So today we'll be covering all of those kind of topics. Where do you want to look for resistance support? Do you want to be specific to one area or more of a range instead of just one price? Does that help you in your long-term investing and trading journey? We'll cover all of those topics and more. Tyrone, how are you going this week? What a 24 hours it's been so far.
It has been massive. Welcome, everybody, and I hope you all had a great Easter break. Market has not given its reprieve in terms of volatility. It's tough when they keep changing things on the daily, and it makes the market very unstable. But we have to ask ourselves, really, has some of the damage already been done? Like, you can relax tariffs here, and you can. Is it going to be believed now? I think the world's stance on what the US has done, may be actually a little bit more longer term than just assuming that they're going to they could just relieve a tariff and actually fire it up again the next day, Tom, as we know. So talk is cheap, as we know, but you know what isn't cheap, Tom? Earnings results. And that's what we're really looking at now. So we've got the double banger of earnings results and volatility from tariff talk. And support resistance is one of our favorite topics because it's one of the most important things. Actually, we talk about dynamic support and resistance all the time in terms of moving averages, VWAP, and a lot of the indicators that actually move with price. But the static form of support and resistance that is actually vitally important covers a lot of different things. It covers areas of support and demand, obviously, of consolidation, but also visuals, psychological levels, and previous, probably just as importantly, previous role reversal zones of where support was once there, which could become resistance, or resistance that was once there that could become support when price actually does cross it. So it's a trading it's a trading method in itself, and a lot of people only use support and resistance actually to trade very successfully. So we are a very, very big fan of it, and we're going to cover it in very good detail tonight.
Yeah, so I guess we'll start off here with the US 500, Tyrone, and welcome everyone that's saying hello to us as well in the chat. Great to have you here live. So it's about everything in markets is about understanding a simple concept such as price action, support resistance, obviously one of the best for that, and then stacking things on top of your favor. So as you can see here, we're getting a bit of strength here over the last 24 hours as the expectations of tariff reductions, or at least de-escalation, come through. And the market is now on a bit of a rip. And if it is going to find the next level of very heavy resistance, then that could truly be around this level up here, isn't it, Ty? This most traded level, which uses, of course, the volume profile, and then, of course, the resistance of the 5670, and then the moving averages of our favorites, which is the 20 weekly and 50 weekly, all being there. And this is what we call a dynamic resistance. So when you're stacking this much in technical analysis and resistance, this can be one of those really, really key levels. So let's just kind of break that down. What are your thoughts here? I mean, obviously we would look at that and we'd say, okay, that's the higher time frame level, but would we bring this down to smaller time frames as well?
We can definitely bring it to smaller timeframes, but I think looking at the weekly is a really important aspect here, because we're seeing basically a level of what I just talked about, dynamic resistance and static resistance, forming very, very close where price is. I think that level between 55.50 and 5600 is an extraordinarily dangerous level for this market. It may well reach it on the way up, but I think the important thing to remember, and I know we've talked about this over the last few weeks, in particular when we see all of this volatility, is that this level was already being tested prior to tariff gate. So, when you know that the market was already testing that level very heavily, and it was a very heavy downtrend that it was in prior to the crazy, it's a level that's fast approaching from below now, and there's a very real danger that could be a role reversal zone that could really send this market plummeting again. I think it's important to draw it up on the weekly like we saw, but then coming down to the smaller time frames is where we know where the zone is now because of the weekly time frame. We know where our static resistance is going to be, but now we can monitor the smaller time frames and look for those price, I guess, discrepancies, if you like, when it does actually reach there and how it reacts. Because if we start to see a series of lower highs and lower lows forming, say even on a 4-hour like we've got here, or a 2-hour, or even up to an 8-hour, that starts to spell a very, very significant shift in what is actually an uptrend at the moment, but we could see quite a difficult period to actually get past. Now, conversely, if it does break through there and blasts straight through that level and then comes back and tests it from above, that creates a level of support again from what was already a level of support. I think personally, it's going to take a lot more than tariff reversals and easings to actually make the market go above that. I think it's going to take a solid earnings season, Tom, to actually make the market react in that way, because I think the world is on notice. I think the markets are on notice, and I think we're really looking for basically good results from the big companies now to show that the economy is actually strong and on its own 2 feet without all of the I guess the noise that we've seen over the last few weeks.
Yeah, so obviously the noise is causing a lot of front load and back load concern as well. But I guess with price action, the great thing about this is we know levels that matter. And as you can see here pretty clearly, if you were like marking out a resistance, you would mark something around this 54.80. And you would say, at least with statistics, that if you were to break this level and close above it, that there's a good chance you would get into the 56.70 zone. And then at that point, you would probably be expecting weakness. Now, we often say on this channel, we often say when we're doing these types of videos, patience, react, don't predict. And that's because you could say, oh, yes, it's definitely going to get to 54.80, or yes, it's definitely going to get to 5600. But that's not necessarily true. Also, you might think, okay, 5600 is going to definitely be resistance. Well, what you'll find is that markets often test this zone and they form what we call structure. So within support resistance, there is also structure, which is basically a creation of price around that level, which supports it, or of course creates a resistance, and that's effectively what ends up happening. So we might hit into this level, someone initially takes profit, and then the market goes down. Then somebody then buys it up and says, "Oh no, I think it's stronger." Then somebody takes profit and of course drops it down, and then it might try one more time, and then that happens. Now, when you get a sequence like this happening at this key level, that's that patience, react, don't predict kind of read. So in essence, it looks likely that if we break 54.80 tie, that we would be going towards 5600, 5670. And it also looks likely that that could be a key resistance zone. But we really need in our system more than just correlation. We need that final step, which I guess we've been able to bring up over the last decade plus that we've been doing this, well over. And we've been able to create that replication strategy. So you really need that idea of making sure you're patient. And I find that with traders and investors, anyone that isn't patient and tries to predict heavily, especially when it comes to day trading and scalping, tends to not be around for the long run. Whereas the people that are more patient, they're the ones that usually survive, aren't they?
Absolutely, and I think that's going to come. We will get there eventually, and I think that is no truer statement has actually ever been said in terms of proofing is when we get to gold, and why you have to be so patient when you're. How many people got caught out on gold thinking that 3,300 was going to be the major point, and they're all trying to short it. I think we said last week, Tom, that it could be at 3,400 in a heartbeat. Not only did it get to 3,400, actually hit 3,500. And that's what you would, you could get caught up in that storm if you're trying to short something because you think that's where it's going to stop. And that's where the patience comes in. The patience of actually waiting for it to actually reverse. One thing, if you take anything away from this webinar tonight, take away that the market doesn't have to actually do anything. And nothing like trading in the direction of a trend is going to save you more than actually trying to actually reverse a trend that's extraordinarily strong. Trying to reverse gold at the moment is actually probably one of the most dangerous trades going around because gold doesn't have to stop. It's not linked to anything. And it could, like I said, it could blast off to 3.8 now and no one would be surprised. It's actually pulled back to a decent level where you actually even contemplate the next potential move. It's
well, let's talk about that.
Sure.
Yep.
It's fine in that direction. If you're trading in the direction of that extraordinarily strong prevailing trend, it's a lot more forgiving. The market is a lot more forgiving, even if your entry point isn't that great. Basically the volatility and the momentum of that trend will generally come in and save you. However, if you're trying to short something, that is extraordinarily strong in the other direction, and you don't get your entry absolutely spot on, the rebound effect when it does eventually kick into gear can be very, very brutal, and not many stop losses are going to survive it. Look, a perfect example, right? If you thought 3,300 was going to be, the place it was going to sell off, you're probably going to have a stop loss. It had to be a visual stop loss, not a one that you can see on the chart, because it has to be a psychological level because it's never been there, right? And 3,400 probably would have been the safest bet. You would have said, well, let's put it at 3,400. It's giving it $100 level. Yeah, it blasted $100 past that. And that's the danger. Like, you've got the patience is so important at a level, especially when a market is, or an instrument is at an all-time high like gold was. Now, we look at this 2-hour chart here, and Tom's brought up a decent zone here where you can look at it and say, well, all right, we've already broken through this level. We've pulled back a little bit to it and then shot off. If we're going to go long from an area, this is the sort of area that will get our attention, because for one, it's come back to a level of what could be potential support from previous resistance. What we're looking for now is a sequence of higher highs and higher lows to actually give us the momentum in the direction of the existing prevailing trend that is very, very clear on the bigger time frame. So they're the isolation points that we're looking for. Support and resistance when you use multi-time frame analysis. So, I mean, the best way to describe it, we saw the daily and the weekly on gold. It looks like it's on an absolute tear, going up in an extraordinarily heavy momentum style. We go to the smaller time frames and we isolate these little pullback zones that are formed from previous support and resistance, and we look for that mini reversal to actually join the direction of the trend, not to trade against it.
Yeah. So here we have the market coming down to the 3,320 zone, and of course you can see I've just drawn a kind of rudimentary trend line on the way down, but actually it's followed it quite well, hasn't it, Ty? It's been making a series of lower highs and lower lows the entire way down. And, we're facing that off this morning. We're also facing a little bit of resistance or supply, smaller timeframes. And I guess the first inkling of something turning around here will probably be making it through this area. More confirmation, obviously, after something like a 3380, 3390, which will get it above this previous high over here. And as Tyrone mentioned, the trend has been very strong. So really it makes sense for the buyers to still be generally around, and therefore trading in the direction trend has been the best way in gold. This sell was, of course, quite large. You spent almost $200 an ounce in only 24, 48 hours. So that tells you there's a lot of volatility at this price. But obviously, history will tell you that generally best off following trends and looking for these key levels. And of course, this is by no means a guarantee. Nothing is. The way you always look at these markets is you're playing statistics. So basically, if you know that if you did this hundreds and hundreds of times and you had those odds and you had, of course, your setup or whatever it might be, that if you risked your 0.5% of your account or 0.2% or 1% or whatever it was, that overall, if you did that hundreds of times, then you would be able to replicate. So the key is, again, to properly risk manage this kind of setup as well, isn't it, Ty? Because even if it looks great, sometimes we've seen the best trades and they look the best, but they don't work. Sometimes the ones that are a little bit more sketchy and you put in still enough, those are the ones that do work.
They are, and the market does, serve to be the best learning mechanism there is, isn't it? Like, it's, if it was guaranteed, if a great setup was always guaranteed, everybody would be doing it, right? So that's why you've always got to mitigate risk, and yes, you've got to be patient, but the best form of trading to be successful in the long run is to have a replicable plan that you can apply many, many times over and over again. Are they going to work out every single time? No, of course they're not going to. But if they're working out more times than not, and if your take profit and your stop loss risk management is in queue, you can't not make money. And I think that's the important part. When you know that you've got a good strategy and you stick to it and you're patient enough to only take the quality trades, it doesn't guarantee that every single one of them will work. But what it will do, it'll give you far more winners than losers. And if you've got your risk management right, you're going to be a successful trader. I mean, it really is as straightforward as that, isn't it?
Mm-hmm. Absolutely. And you can see, again, even if you're looking at like something like silver, I mean, obviously the trend has been up recently, Ty, but it's found this level of consolidation. We don't know whether it's going to break out to the resistance side yet, or of course the more the support side, which is sitting around 32 kind of 20-ish zone. But one thing is for sure is that when this does breakout of consolidation, generally the more something consolidates when it breaks, it's usually more aggressive. So of course, if you were to pick which is stronger, traditionally you're always going to go with the one inside in the direction of trend, because of course that makes the most amount of sense. But you just need to be aware, one of the great things about support resistance, the longer the coil or the longer the range, generally the more powerful the move. And you can see here, because we've got wicks on both the support at 32.10 and the resistance here at 33 to 33.20, that means that we have very strong opinions on both these sides of buyers down the bottom and sellers at the top. So if we break through, we're probably going to squeeze those positions, as there'll be a lot of sellers stop losses and a lot of buyers stop losses to be had.
Absolutely. I think it's a really, really good zone. And I think it would be a smart play to probably mark out the $32 mark, which is the bottom of that consolidation zone, and also the $33 mark, which is the top of that consolidation zone, and really, take the break of either side. And I think there's a case for both sides there. If it breaks to the lower side, maybe, we're going to see a bit of weakness sort of kick in for a little bit. That's probably going to correlate maybe with a bit more of a sell-off in gold. But if it does actually get above that 33, then we're looking at potential continuation. And look, you could argue a wedgie sort of, flaggy sort of trade there if you sort of zoom it in and zoom it out a little bit. But there's quite a bit of volatility. But one thing's for certain is consolidation there. There is a war going on between the buyers and the sellers. There's no question about that. And when one of those key levels breaks, the longer it stays here, probably the more aggressive the break is what we're trying to say. And, it could end up, from 33 to, 34.50 very, very quickly, or it could move back down to $30 very, very quickly if it breaks to the downside. So certainly one to watch, but probably set your alerts around those key levels at, 33 and 32, which is the edges of that consolidation.
Yeah, really cool consolidation. Maybe even see a breakout in the next 24 hours. We'll find out. Another thing to note here is probably also silver-gold ratio, which we've mentioned several times on the show. And I guess we can use support resistance in this case as well. And it might interest quite a few people that if you actually look through history, silver is at one of its cheapest rates. And if you actually use a different code here and use the TVC codes in TradingView, then you'll be able to go through a lot of history. And you're actually going to notice, if you go back all the way to the 70s as well, that silver is trading at one of the cheapest rates it ever has versus gold ever. So that's also an interesting thing considering how much gold's moved. And it brings us on to the next topic I thought we'd bring up, which is Bitcoin. Now, Bitcoin, we were talking about last week, Ty, the idea of a double bottom that formed around that real height of the kind of tariff discussion. And we obviously talked about proofing. So we'll just use here this support, the double bottom pattern, and then we'll extrapolate that out. And of course, we got this proofing of this resistance. Now, what's happened over the last, you can ignore some of these lines, for some reason it's resetting, but anyway, the point is, I'll just update where I think those are. But the point is that we hit this level and then we consolidated and we started to break out. Now, this is one of those momentum resistance plays, and it's what we call a movement of equilibrium to equilibrium. So is there any wonder why a market would move up to this point, Ty, from where it was? So it broke out, and then of course it's moved to this area. What are your thoughts here? I mean, what can we explain to everybody about why this happens?
Yeah, look, it blasted. It surprised me, to be honest, how big that move was. I mean, I thought 91, 92 might form some sort of resistance for it, but it was just so aggressive that it went flying to the next very heavy support, what was support level, which now I would expect would probably be resistance. It got there extraordinarily quickly. It was consolidating, yes, and it had a double bottom. It had all sorts of good things going on. But you could have been very forgiven for taking profit at 91,000 or even 92. Like, that was a zone. It just kept going. And but it has gravitated. Look, and I know there is a little bit of pull. I mean, look, this is being influenced by everything else, of course, that's happening in the markets at the moment. But it has actually gravitated to a very, very serious support zone, or that was support, which now we would probably expect is resistance. You can see the visuals. If you look to the left of the chart here, you can see that there's a lot of touches at this area, like a lot of interaction from this zone. So, it's one of those ones where I mean, look, you could argue a really big inverse head and shoulders there on the 4 hour, and the neckline was the break. I mean, you could, like I said, I kind of see it. And I know Tom would too. Yeah, we wouldn't probably, use that as a perfect example of one if we were trying to find the absolute perfect head and shoulders inverse, but it is there. No question. And then when it did blast through, it's actually hit the. I think it's almost hit the take profit mark off it too.
Oh,
So
it might even have more in it, but that's
it
still the
might even have
resistance.
more in it.
Next
Yeah, my
resistance.
God.
Mm.
Yeah. Yeah, it's
Mm.
and when you put, I mean, it'd be interesting to see a volume profile on this, Tom, on a daily. Can you put a daily
Yep.
chart on and put a volume profile? I'd just be very interested to see where the real serious levels are now, because this is one of those ones that now that it's broken through so much resistance, it's a little bit like gold in a sense, and not much can hold this back.
You can see the chat's very excited about Bitcoin at the moment. A few of them probably writing it. The reason why, of course, is because it was that we got some crazy looking chart thing going on there. But we'll just quickly load this fib, and what we've got here is obviously you can see the golden kind of pocket, or the 61.8 fib and the 75 fib sitting behind it, acting as kind of this completion of if that is a head and shoulders. Whoops, we'll get rid of this. So a lot of stuff lining up very soon for Bitcoin. It's fast. It's fast. And look, this could be part of something bigger. Of course, it could be, but it's going to have most likely some problems between 96 and 98. And I think that's what a few people have got here. Michelle says, I have POC in Golden Pocket for BTC at 96, 97. Yep. Should we expect Ethereum to follow Bitcoin? I love Bitcoin. Is it his name, or is it a different beast? I think a lot of this Bitcoin reaction is ultimately a reaction to gold. So obviously a bit of a hedge into alternative assets. I mean, that's the way you're reading it, and that's the way statistics will play. That being said, of course, all altcoins would ultimately move up if Bitcoin moves. Bitcoin's like the S&P 500. It moves first, and the others will come. Now, will they do as well, Ty? Usually, historically not.
Yeah, that's right, exactly right. Michelle, I'm most impressed that you're actually able to identify that inverse head and shoulders, because look, it was there, but to the trained eye, it's there. But it would probably be difficult to explain to someone who has a little bit less experience. I'm quite impressed that you actually noticed it. But just as importantly, you did proof it to a level that is correct as well, around that sort of 97 to 98,000. So very, very well done on that.
All right. So Bitcoin obviously moving, maybe a little bit more in it at a first resistance. If pullbacks start to occur right now, Ty, what's your thoughts in terms of, are we generally going to see, now that it's broken through, more buying action, at least in terms of support resistance? I mean, things like this 88,000 should act as more of a resistance now, shouldn't it?
Yeah, I think if we are going to see a pullback, if we see a pullback now, I think I'd be very comfortable around that 92,000. I'd be watching that with a lot of interest, 91, 92,000, and then around 87, 88,000. I think they're the two levels that I would be expecting support to be, given that they should have been resistance in the first place. But they can act, and also the moving averages, by the way, are about to cross over on the daily for the first time in quite some time. Actually, I'm just looking at my chart over here, and it was actually at 98,000 the last time it actually crossed. So it's all but nothing short of a miracle sell-off would actually stop these from crossing now. And if it did pull back to around that sort of 87, 88,000 in the next few days, and it can do it, we know how fast it can move, it's going to have the support, dynamic support as well, of the 50 and the 20 moving average as well. So I would be very excited about around that zone, actually. I think if it came down to around that level, I'd be watching very, very carefully for any form of uptick. And by that we mean a series of higher highs and higher lows on a smaller time frame. It's not an automatic buy there, but by golly would catch my interest.
Yeah, so good level potentially there for Bitcoin. Obviously a nice breakout over the last 24 hours, catching up, or starting to play catch up maybe to the gold move. So we got mentions there before of the NASDAQ, US 500, many others obviously going absolutely tearing up because it's a news-driven market. So we need to be, again, aware of your key zones. So you've got your kind of 19,500 as your resistance here on the NASDAQ in terms of key levels, so 19.5-ish. And then we have also the supply around this area. So is it doing something pretty big today? Yes, it's trying to break the daily 20 moving average on the upside. Is this the first piece of news that we've seen that's, kind of positive? for a little while. Yeah, of course, de-escalation of tariffs are what the wall of worry is all about. So we obviously climb the wall of worry whenever you get de-escalation. And you'll notice the most traded level is 19.6, which turns out to be kind of that resistance within this supply. So yeah, I mean, look, it's good and certainly a good first step. But like we said before, the S&P and the Nasdaq probably hit those similar levels: 5,600, 5,670 on the S&P, and this kind of 19.5, 19.6 on the Nasdaq at similar times, and that's what we call cross correlation. So often you'll find a lot of supports or a lot of resistances will all happen across so many pairs, including currencies. In fact, Ty, let's go to the dollar, because it hit a pretty major support, and you'll notice this on the weekly. So we come down here, and we see here this little level of demand or support that's over here at 98. I don't know why I keep losing this screen, but anyway, that's all right. Seems to be some technical malfunctions here, but you can get the kind of point here. And we've seen some strong buying come back into the dollar, just as I would say the general consensus seems to be out there that the dollar's dead and it's all over. I mean, I don't think you can kill the US dollar in a couple of days, guys. So yeah, so that's the thing, though. The narrative often pushes these things as well. So what a lot of people would be looking at is if you're in shorts, this could have been a very interesting take profit zone. And obviously, I would say this is a point where you'd be looking for a lot of structure. Could it break down and keep going? Yes. If it does, 96, 95, 50 type.
Yes.
If it goes up, what do you think?
I reckon if it goes up, I think it could go all the way to 104, actually. Yeah, I think the upside is quite large. Look, and Michelle, points out that the weekly's got a very nice, lovely wick on it, and I agree. If we manage to close out the week positively, and when I say positively, I'm talking about somewhere above, 99.50. If we have a positive week next week and we find ourselves back trading around even 100 or 110, that's going to make one almighty morning star. And on the weekly, and a weekly morning star here would see, I think, a considerable move, and I think that move could be up to 104, 104.20, big move. So we need to see that wick. I'd love to see that wick close, close to where it is now, and then have another bodied, have a solid week next week, closing it around just above the 100 mark. That would give us a morning star on a weekly that would be extraordinarily sexy.
And the thing about this as well is it would be against the general narrative. So sometimes you'll find, and I'd love to ask the community here that's right now, we've got many people viewing, how often do you find that the price action or the support resistance levels go against the general narrative out there in the news? And I think this probably takes us to the next major level, which is, of course, Tesla, because, of course, Tesla comes in with one of the worst reports of all time. Absolutely looks shocking on every metric you've ever seen to fundamentals, and people are left scratching their heads. I mean, I saw so many people like Tesla will burn and stuff as articles today, and Tesla's down and Tesla with flames everywhere type. But ultimately, you've got to remember the price action had already gone down 40% leading into this earnings announcement. So it's a classic case of, okay, it could have gone down, but everyone bet on the negative side. Puts were all over the 170, the 200, the 220, and the bad result comes in, and that's fine. But as you can see here, the market chooses to say, well, you know what? Too bad, so sad. We're going to buy this. And now it's sitting at 253 and pre-market up about 11, 12%. So here's some comments, Ty. Michelle says Elon was saying all the right things. Potentially, I mean that could be it, but again, I like to think it was because everyone bet on the negative side, and that's part of it. But future guidance is important. And Stuart says here, news and narratives are often going against the price action. And you'll often find your best trades happen when you're trading against the narrative, but that's what the price action is doing. We often say follow the flow, not your opinion. So that's a really good one.
Yeah, I think we've got a lot of good points that you need to take out of tonight, but I think one of the most important points, and I think it kind of relates to what we're talking about, is that the most important and probably the only leading indicator there is actually price itself. And if you follow price, regardless of what the news, is saying, price dictates where the market is going faster and more reliably than any news, any narratives. So I think, and that's why we love technical analysis, because that is really price interpretation, right? So, we are very, very avid candle, followers. We love our candles. Because candles tell you everything you need to know about price. And, realistically, it's the only leading indicator that can be relied on. So that's what Tom's trying to say. When we are talking about, looking and trading what we see rather than what we believe, that's what we're talking about. And I think if you take that away and follow that, you're going to put yourself in very, very good stead.
All right, Ty. Well, I guess a great session, everyone. Some great support resistance stuff there. Obviously, some great correlation with a few other pairs. Some exciting times as we see vol continuing to be high. I do remember that the VIX is still above 20. So whenever it's above 25 in particular, you have to expect upwards of 3 to 5% moves on the daily. We're getting one of those as we record this session. And that means that you want to have that risk management in line. As we often say, patience, react, don't predict. And we also say if it's in the press, it's in the price. And that's why price action is usually the best course of action. Thank you so much, guys. We will see you in the next one next week, same time, same place. And you can also, if you're watching this in video, subscribe down below. Click on the links in the description down below. Make sure to sign up for our weekly webinar series here at Pepperstone, and then you'll get all of the latest updates from us. Ty, any closing thoughts for everyone to maybe have a bit of a think about
only just be mindful that we are entering a very, very important and serious earnings season at the moment. So just when you are placing your trade, just be mindful of that. The market is going to be, the volatility will continue, even though we are seeing potential narratives around easing of tariffs. There is another big and important thing happening at the moment, and that's US earnings. Okay, so just trade carefully. It's just a very important time to keep your wits about you.
All right, guys. Thank you so much from everyone here at Pepperstone. We really thank you for spending your time with us here today, and we look forward to seeing you very soon. Bye for now.
Thanks, everyone.